We invest only in companies that are building the ecosystem of the tokenization industry.
Hi, I'm Caleb Gates from Alphagrowth here at the Crypto Invest Summit in Los Angeles, California. Joining me is Tal from SPiCE VC. Tal, what is SPiCE VC?
So SPiCE VC is a venture capital firm that has two things that are interesting about it. One is it's the first fully tokenized fund, and as such, it's liquid. It means that investors in SPiCE VC are not locked in for the typical period of 10, 15 years until they see exits, because the token is tradable, and they can trade it at any point and exit. And the other thing that is interesting about SPiCE VC is that we invest only in companies that are building the ecosystem of the tokenization industry. So it's the only way today to get broad exposure to the massive growth that is happening in the tokenization industry now and over the next 5 to 10 years.
So for some people at home who don't know what VC is, that's venture capital. So you invest in early stage companies, and you were telling me that the problem with that is you invest in Uber, Series A. Why can't you pull out your money for 5 years, 10 years, 15 years?
Because there are several things about the way venture capital firms work. First, they typically receive investments only through partnership relationships. So they accept typically investment from 10 to 15 people and entities. That means that every person or entity investing in a VC fund typically has to invest $5 to $10 million at least, and they also don't want money to move around, so they limit the investors so they can't pull out of the investment until their exits and money is being returned to investors. So if you invest in a VC fund, you're stuck until exit starts to happen within the fund. What we do, which is unique, is we issue tokens, security tokens, that represent a limited partnership relationship, the same way usual investments happen.
Okay.
But it's not really a partnership relationship, it's token holding. But it gives the token holder the same benefits that an investor in a regular VC funds get. The extra benefit is that it's tradable. So they can choose to exit some or all of their investment at any point in time because the tokens are tradable. So they can keep on holding the token until the end of the fund, the same way it would have been in a traditional situation, or they can choose to liquidate it at any point based on market value of the token. So that's
awesome. So you were telling me that your fund behaves differently than, say, just a security token. How is that? Is that because of what it's based on?
So it behaves differently than crypto. And the reason is that the fund, the value of the token is derived by the value of the portfolio of our investments. We invest in companies, and those companies have real valuations. We publish a quarterly report of the value of all our portfolio, which is audited by a Big Four. And this value divided by the number of tokens basically defines the value of a token. Now, it's still, when people buy and sell tokens, it's market price and it's defined by supply and demand, but it's guided by that quarterly report that we publish. Because at the end of the day, when somebody holds, let's say, 10% of the tokens, they get 10% of every exit that is in the portfolio, which means that the value of the portfolio is really the value of the total of tokens. That's how it works. So if you look at what happened to us in real life, we issued tokens for the first closing of the fund end of March. And people investing back then invested at a rate of somewhere between 80 cents to $1 to a token. The last report we published, which was about 2 months ago, the value per token was already $1.38 based on the actual investments in the portfolio. So it means that people investing in January to March made somewhere between 38 to 75% on their investment where the crypto market went down close to 70% during that period. So totally different behavior. They're unrelated, they're totally different assets, although the underlying technology of blockchain and tokens is the same, but the assets behind it are different.
So I know we didn't talk about this yet, but do you see your way of doing VC now affecting traditional VCs, or the ways that?
Absolutely, absolutely. The reason is we're providing exactly the same type of investment, the same type of asset, but liquid. Now, we already see more and more VCs moving into issuing tokens for the next fund. As an investment, if you have two equivalent types of assets and one of them is liquid, the one that is liquid is worth 50% or more than the one that is not liquid. That's the value of liquidity. So as more and more VCs start doing it, the rest of the VCs have to move into this because they can't compete anymore, right? They're offering exactly the same product, but non-liquid. Nobody's going to invest there.
So you're a trendsetter is what you're telling me.
We're a trendsetter, and we believe that several years from now, the whole VC industry is going to look like that.
That's awesome. So if people want to find out more about your company or invest in SPiCE, how can they hit you up?
So first, it's spicevc.com, or on Telegram, it's at SPiCeVC. And I would say that we're now raising funds for the rest of the fund. It's a second closing. It's a good time to come and join. And happy to talk to anybody that has questions about us.
Awesome. Well, I've enjoyed talking with you, so thanks, Saul.
Thank you.
Look forward to seeing the progress.
Here.